everyone, this is Adrienne Salyer with IPX1031 Exchange. Today I'm here to talk about vacation home and second home rules within Internal Revenue Code 1031. Everybody knows that if you own an investment property that's rented or leased out year-round, whether it's a residential rental, commercial, industrial, or even apartment buildings, those actually qualify for a 1031 exchange. What doesn't qualify are property or is property that's been held for primary residence or primary use or personal use. And somewhere in the middle are the second homes and the vacation home rules. The IRS has very specific rules and requirements on the second home and vacation homes if you want to sell and get the tax deferral, not paying the capital gains tax due upon sale. First, you must have owned the property for at least 2 calendar years prior to the sale and closing of that sale. In each of those last 2 12-month cycles, you will have had to have rented the property for a minimum of 14 days per year. So that's essentially 28 days over a 2-year period. And although that sounds easy to do, it's only a couple of weeks. But number one, you have to report that rental income on your tax return for the last 2 years. And secondly, your personal use and enjoyment, potentially family time there, cannot exceed the 14 days per year in each of the last 2 years. So if you only rent it out for 2 weeks a year and you use it for 2 weeks a year yourself, what is it doing the rest of the time? Just sitting empty? That's not really ideal, right? So in a 1031 exchange, if you own a second home or a vacation home, your goal is to get as much rental time in the next 2 years as possible, so that when you go to sell it, it's already keyed up to be an investment property for 1031 exchange purposes. So remember, any second home or vacation home must have some form of rental use that you can show and report on your tax returns. So going forward, when you buy the new replacement property as a part of the exchange, those same rules apply over the next 2 years. You have to rent it out for at least 14 days a year in each of those next 2 12-month periods. And you can't use it for more than 14 days a year. It's best to get as much rental use out of it as possible, as earlier mentioned, with the income coming in to help support that property. And down the road, you may decide, hey, I don't want to rent it out anymore, and that's fine. You can use it and keep it as your personal or second home, or maybe convert it to a primary residence, maybe your retirement home. So again, just keep in mind, vacation home and second homes under Internal Revenue Code 1031 have different rules, and they're pretty specific. Please reach out to me if you have any exchange questions specific to rental homes or second homes. I cover Arizona and New Mexico, and I'm very well aware of all the requirements. So don't hesitate. Adrienne Salyer, IPX1031 Exchange. Thank you so much.